Did you know that 49% of Americans don't even have $400 in a savings account in cash to handle a typical family emergency? Welcome to the Money Growth Academy. My name is Dee, and this is where we demystify the stock market, simplify investing, and multiply your opportunities for financial success. Wait, did you say that 49% of Americans don't even have $400 in their savings account to handle a typical family emergency? Wow. It is surprising in some ways, but in some ways it's not. It's hard to save money. It's extremely hard to save money. It's not, if it was easy, more of us would be doing it. Look, I know it's hard. So look, if you do have to save, and we do, wouldn't you want to earn more on that savings? Wouldn't you want that savings working harder for you? It makes sense to me. Here's a fact. If your savings account is paying you less than 2%, it's time for a new bank account. Look, there's millions of Americans today that are struggling to save money every day. And the savings that they are saving, they're only earning 0.1% on those savings. So what if I told you you could earn 2% on your savings? You're probably already aware, if you've been on the news, and certainly if you're on our channel, the Money Growth Academy, that there was a rate hike, right? So the Feds raised the rates. Well, one of the side benefits of that 0.25% or 25 basis point rate increase is that it also put the banks in a position, because they have to pay more to borrow, to now offer us, the consumer, a higher rate of return, particularly on these online banks. And so these online banks are very competitive as a result of the Fed rate hike. And so they want your money. And so they're willing to pay more for it. And so that's how you can get a 2% or better return on your money. Before we get there, let's consider what savings accounts are good for and maybe what they're not good for. So what they're good for is maybe building an emergency fund. And that's where you save up, 3 months or more of your net income so that you could face these untimely emergencies as they come up. They're also good for holding regular deposits. Maybe you're saving some money because you want to begin to learn to invest and you need somewhere to put it where you can earn a fairly decent rate of return. So that's a good place to do it. Where it's not good to use a savings account for is long-term retirement, because it just doesn't earn enough. When you think about it, when you think about the doubling effect, and we'll talk about that more in another video, but at 2%, it would take an initial deposit of $1,000. It would take it 36 years to double. That's a long time. So it's not a great place for long-term savings for retirement. And it's not a good place to set your money if you need to get it out all the time. You're in it 3 times a week, 2 times a week. You want to just use a checking account for that. So this is kind of a midterm, short to midterm place that you put money as you're trying to reach some short-term, midterm goal, right? Maybe you want it in savings because, again, you're saving for a vacation at the end of the year. The purpose of a savings account, it says, is to have a trusted place to save money at the best possible rate, risk-free, for a particular purpose, such as I just previously mentioned. And really, because of the internet, you're no longer at the mercy of high fees and low rates offered by local credit unions and banks. You can now take advantage of the new savings rate pricing war that's going on online today in the financial markets as a result of the recent Fed rate increase announcement. And so, well, let's talk about this. So because one of the questions I get from people a lot is it insured? Is it protected? Well, these online banks that I'm sharing with you, and there's a lot more than what I'm sharing with you in terms of choices, they are FDIC insured. So what is that? Well, the FDIC is the Federal Deposit Insurance Company. It's an independent agency created by the U.S. Congress as part of the Glass-Steagall Act of 1933. And everybody remembers the Great Depression and the run on banks, and the banks didn't have the money so that people can get it out. Well, banks are now required to hold upwards to $250,000, or at least to guarantee or insure a depositor up to $250,000 of their total deposits. And so that's what that is. And really the purpose is to provide stability to the economy and to the banking system. So if you're getting less than 2% on your savings, you should ask yourself, why? So let me just share an example with you. So let's assume you had an initial deposit of, and in both of these scenarios, deposits are the same, the monthly deposits are the same. The only difference is the rate of return. So in scenario one, you have a $1,000 initial deposit, $100 a month deposit for 12 months, but you're only earning 0.1% on the bank savings rate of return. And that will deliver you $2,202 at the end of the year. Now that's not including taxes and insurance and inflation. So in scenario two, same amount of money, same monthly deposits, but at a 2% rate of return, and you'll wind up with $2,233. Only a $31 difference. And you would say, well, D, that's not a lot of money. That's not a big difference. Well, if I was standing in front of you today and I gave you $31 as a choice or $0, what would you take? Exactly, you'd take the $31. So it does make a difference. And if you ratchet that up to more money over time, it's a significant difference. So look, as you shop online for these new online banks, here are a few services that you might want to consider, that you might want to have. Obviously higher rates, 2% or better, no minimum balance or minimum monthly balance required, ATM access if that's what you'd like, a number of monthly, how many monthly withdrawals can you take before there's penalty. Again, these are savings accounts, so savings accounts are different than checking accounts. If you need to get to your money all the time, every week, multiple times, then you probably want that to be in a checking account. You also want to know the maximum amount of withdrawals that you can take out by ATM without penalty as well. What we did here is we put together a quick comparison of several online bank savings accounts that we found online. Again, this is not a recommended list. It's not a stack rank list. This is really for educational purposes only. You'll certainly want to do your own research to see what savings accounts work best for you. Here's a look at the table. You can see outlined in green there. Those are the rates. I want you to take particular attention to those. PNC, 2.35% rate of return. American Express, 2.10. Synchrony Bank, 2.20. Marcus by Goldman Sachs, 2.25. And then Barclays, 2.20. Ally Bank, 2%. And then Discover Savings Account, 2%. And then what we list on the left side here is the annual percentage yield, the minimum to open the account, the minimum balance, monthly service charge. Do they provide for free checking? Is there ATM access? Maximum monthly withdrawals? Is there mobile access available to your money? Also, can you link your savings account to your checking account at your local credit union or bank? And is it FDIC insured? And all of the ones that we selected here are, and you can see that they'll provide that for you online as well. And some will even tell you if they have, because if you use another bank's ATM system, they'll charge you. Well, some will actually, like Synchrony Bank, they will refund you up to $5 worth of those fees. And you'll want to take a look at that. This table is a good start as you do your research to look for. As you can see, 2% is not difficult to get. And so when you compare 2% to 0.1% and what it could mean to your pocket and to your family, certainly it's worth taking a look at. Well, there you go. That is really a brief look at some of the competitive rates online for bank savings account. We hope this information was helpful for you in helping your family grow its savings, grow its investment opportunities in 2019. So make sure to select the savings account that best fits your needs. Thanks for joining us today at the Money Growth Academy, where we demystify the stock market, simplify investing, and multiply your opportunities for financial success. Be sure to leave us a comment below. Absolutely. And if you're not a subscriber already, make sure you do so. Again, we're really about building a like-minded community that we can have both online and offline conversations with. And so we'll see you next time.